Back in February, the U.S. Environmental Protection Agency made a very subtle change to the way it enforces air pollution standards here in the U.S. And at the time, it seemed like a very tiny little nuanced change, but as it turns out, there are potentially massive implications for the whole global natural gas market. And the deadline for compliance with these standards is coming up on September 5th, and we still don't know if the EPA is going to grant any exemptions or if any of these companies have any intention of complying and what the effect of this rule change might have on gas markets. What's up, guys? I'm nobody special. And with that, we are going to shrink my big melon of a head, and I want to get into this article. This is on btuanalytics.com. I'm going to put a link in the description down below to this article because I've been talking about this topic on some of my live streams for a while now. But this article here on BTU Analytics, written by John Bowman, is one of the most detailed analysis of this rule change that I've seen to date. This is potentially huge, and here's the title: EPA rule change could have wide-ranging consequences for natural gas markets. Back in February of 2022, the U.S. Environmental Protection Agency announced a change to its regulatory regime for gas-fired turbines under the National Emission Standards for Hazardous Air Pollutants, or NESHAP, a framework in place since 2004. Now, at first glance, this announcement would seem to be a minor update to a highly technical rule, but a careful examination of a list of the impacted units reveals that the change in enforcement framework could have significant impacts both to supply and demand dynamics in natural gas markets in the U.S. and beyond, affecting LNG exports, gas-fired power generation, and gas transmission and processing infrastructure in particular. Specifically, the EPA announced that the agency would be removing an 18-year stay in its enforcement of the rule's formaldehyde standards for two subclasses of turbines and will now be requiring all units to demonstrate compliance with the full rule by September 5th of 2022. That's only about 3 weeks away. Now, here is the EPA document in question that we're talking about here: final amendments to the air toxic standards for stationary combustion turbines to remove a stay of the formaldehyde standards in two subcategories. See, these regulations were rolled out back in 2004, but there was pushback by the industry, and the EPA put a stay on the enforcement of these standards. In other words, they just delayed enforcement action on this new rule. Now, the idea was they would delay the enforcement action, anticipating that it would be challenged in court and that it would be thrown out. The EPA would eventually get rid of this requirement. But it didn't go that way. It was never thrown out in court. And now, after 18 years, the EPA has said, you know what, we're getting rid of this stay. So this rule that's been on the books all along is now in effect, and the industry has until the 5th of September, just 3 weeks away, to demonstrate compliance. Now, here in the EPA's own words, on February 28, 2022, the U.S. EPA removed the stay of formaldehyde standards in the NESHAP for stationary combustion turbines. The stay applied to certain subcategories of gas-fired turbines at major sources of hazardous air pollutants. The EPA has evaluated the authority for the stay in light of recent case law concerning the Clean Air Act and Administrative Procedures Act and has been unable to identify any authority for the stay in either the EPA or the CAA. Formaldehyde can cause irritation of the skin, eyes, nose, and throat. High levels of exposure may cause certain types of cancer. And the stay applied to formaldehyde limits on two subcategories of stationary combustion turbines located at major sources of hazardous air pollutants. The subcategories are new lean premix gas-fired turbines and new diffusion flame gas-fired turbines. The EPA estimates there are about 250 units in these two subcategories, mostly sources such as compressor stations, power plants, and chemical plants. Now, going back to the BTU Analytics article, the most immediately striking aspect of the list of newly impacted units is the inclusion of a large number of turbines involved in the production of LNG, or liquefied natural gas, for export at three large Gulf Coast facilities: Cheniere Energy's Sabine Pass and Corpus Christi facilities, and Sempra Energy's Cameron LNG. With global demand for LNG at an all-time high, natural gas flows to these facilities have totaled between 8 and 9 billion cubic feet per day in every month of 2022, and each facility has continuously run at or near capacity. So here is a chart showing these three facilities: Cameron, Sabine Pass, and Corpus Christi, and you can see that it's between 8 and 9 billion cubic feet per day of natural gas has flowed into these facilities every day so far this year. Now, to put that in perspective, the average daily natural gas consumption for the whole freaking country in the US is about 85 billion cubic feet per day. It varies. In the summertime, it's less, it's higher in the winter when everybody has their heat turned up. But 85 billion cubic feet per day, total US gas consumption. And right here, just this change to the enforcement of this NESHAP standard has a potential to eliminate almost 9 billion cubic feet of that gas demand. This could be majorly disruptive to the flow of gas in the United States, not to mention the effect on Europe, who has become hopelessly dependent on U.S. LNG exports. These three facilities combined represent about 65% of U.S. LNG exports. In total, EPA documentation indicates that the rule change impacts a total of 44 turbines at Sabine Pass, 18 at Corpus Christi, and 10 at Cameron. In all cases, the impacted turbines are apparently involved directly in refrigerant compression operations. Also, according to recent media reports, Cheniere has petitioned the Biden administration for an exemption to the reinstated formaldehyde standards, maintaining that coming into compliance would entail a major engineering effort and halt or reduce operations for an extended period of time. If any or all of these facilities are required to drastically reduce operations to come into compliance with the revised NESHAP standards, the results would be significant to markets in the U.S. and beyond. Keep in mind, in the weeks following the June explosion at the Freeport LNG facility, Henry Hub prices fell more than $2 per million BTUs. While there was likely a number of other factors contributing to this decline, it's clear that the removal of Freeport's 1.8 billion cubic feet per day of gas demand exerted significant downward pressure on pricing. With daily gas demand at both Cameron and Corpus Christi sized similarly to Freeport, and Sabine Pass demand is roughly twice that of Freeport, the market shock of extended shutdowns at any of these plants, individually or collectively, would likely be at least as large as that observed in the aftermath of the Freeport explosion. In addition, further disruptions to LNG exports would exert even more upward pressure on global LNG prices as natural gas futures in Europe near $60 per million BTUs for the winter of 2022 and 2023. And check out this chart here. This is a chart of European ICE Dutch natural gas futures, which have only gone up in the days since this article was written. So they are not playing around here, folks. Any disruption to these facilities here in the U.S., causing a reduction in LNG exports, would send this chart sky high, and it would make Europe's energy woes even worse. And this would come right as the weather is starting to change. Remember, this goes into effect on September 5th, right as we're leaving the summertime period and heading into the fall and winter heating season. Now, if you've been following my channel, you know I talk about Cheniere Energy stock an awful lot, ticker symbol LNG. And look at this wonderful rally that LNG has had since mid-July. I have forced myself to sit out this rally because I just could not justify buying this stock, knowing that the EPA may be about to shut down operations at Cheniere Energy's two main facilities, Corpus Christi and Sabine Pass. Because if that shutdown were to happen, Cheniere would be unable to capitalize on this huge arbitrage opportunity between U.S. and European gas prices, and this stock would head south in a hurry. Keep in mind, you LNG shareholders out there, September 5th is coming up, and we still don't know what the result is going to be. Again, I currently have no position in this company. Now, while disruptions at large LNG facilities remains the largest risk factor for demand destruction, there are also a number of relatively large units at utilities and industrial facilities that will be impacted by this rule change. And check out this chart here that shows gas consumption at some of these public utility facilities that are subject to this rule change. And it looks like we've got about another 1.8 billion cubic feet per day of natural gas demand included at some of these power generation facilities. Georgia Power, Florida Power and Light, Duke, Progress Energy, ExxonMobil's Beaumont Complex, Southern Power. These are all Southeast U.S. utilities that are at risk of being forced to shut down or undergo some very expensive upgrades that would disrupt operations in the short term in order to come into compliance. It's also worth noting that more than 1 billion cubic feet per day of this additional demand is related to utility power production in the Southeast U.S., including units at Georgia Power, Florida Power and Light, and Southern Power. BTU Analytics currently estimates that total power demand in the Southeast will average 8 billion cubic feet per day in 2022. Thus, these volumes represent a significant total of overall regional gas generation. It's also worth noting that the turbines at ExxonMobil's 366 million barrel per day Beaumont oil refinery are impacted by the rule change as well. Now, everything we've talked about so far has talked about the effects of this rule change on the demand for natural gas, the LNG facilities, the power plants that may have to shut down, that would all impact the demand for natural gas, which would put downward pressure on the prices. But there's also impacts on the supply of natural gas affected by this rule. The NESHAP rule revisions have the potential to impact natural gas supply as well. Several key compressors on many major interstate pipelines and some large gas processing facilities are also potentially impacted. And here is a list of the pipelines, the companies, the number of turbines that are impacted, the number of additional turbines that may be impacted, and the average billion cubic feet per day of gas that flows through those pipelines. And again, keep in mind, total U.S. natural gas market is about 85 billion cubic feet per day, and there are some very big numbers in this column here. This is going to affect a lot of those natural gas pipelines. In the case of pipeline turbines, which are mostly used in compressor station operations, the eligibility of many turbines has still not been determined by the EPA. For instance, Transco has 15 units that may or may not be impacted. However, all of the pipelines listed in the graphic above are critical arteries connecting supply and demand in the U.S. In 2021, these 7 pipelines served 17.7 billion cubic feet per day of demand. That's almost a quarter of all U.S. natural gas flow. In addition to the interstate pipelines listed above, 23 turbines at Williams, Opal, and Echo Springs gas plants, and 4 turbines on the interstate Oasis pipeline connecting Waha to Katy may be impacted under the new rule. While the total gas burn at these turbines is likely not material in terms of overall gas demand, any outages related to bring these units into compliance could potentially impact natural gas pricing through flow disruptions. Remember, these pipelines are key to making sure we take the gas from where we have too much of it and we flow it to places where there isn't enough. In other words, it helps to keep prices steady across the country. If we start shutting down these major natural gas arteries here in the United States, we're going to end up with way too much gas where we don't need it, not enough where we need it, and price is going to be a mess. Now, everything we've talked about so far is all the worst case scenarios, all right? I'm going to throw a little bit of cold water on some of the FUD here because this last paragraph does kind of temper the expectations of catastrophe a little bit. As outlined above, the rule change brings with it potential disruptions to both natural gas supply and demand. However, it seems unlikely that there will be a severe impact immediately after the September 5th compliance date for several reasons. First, the language of the final rule leaves the EPA with a large amount of discretion with regard to enforcement, stating that for a source that fails to comply with the applicable requirements, the EPA will determine an appropriate response, if any, based on, among other things, the good faith effort of the source to comply. It's entirely possible that the penalties for inaction will be minor and or the EPA will continue to work with operators to bring impacted units into compliance via a longer time frame that minimizes disruptions. Second, it's possible that some of the impacted units have either already been brought into compliance or were built into compliance since there has been no enforcement or testing over the last 18 years, so they don't know how bad this situation really is. Also, it's possible that some units could be brought into compliance without a major engineering effort. And finally, it seems likely that the Biden administration will likely take action to avoid disruptions, particularly to LNG assets, due to the geopolitical tensions and the resulting initiatives required to provide energy security to European allies. In short, while these new changes to the NESHAP have potential to impact many key components of U.S. and global natural gas markets, there are both mechanisms and strong incentives in place to mitigate the most disruptive outcomes. So basically what they're saying is whether or not these facilities are forced to shut down really has a lot to do with whether or not the EPA feels like cracking down on them. It shouldn't work that way, but apparently it does. And they're also saying that the Biden administration, which includes the EPA, is incentivized to ensure that LNG production doesn't get disrupted because it's vital to supplying energy security to Europe through this winter, which is already under threat because of disruptions in natural gas supplies from Russia. Now, there's another way to look at that last part, because remember, Biden is, yes, incentivized to provide energy security to Europe, but what happens if that LNG supply gets disrupted? Well, we end up with a glut of natural gas here in the United States, and that drives natural gas prices here in the States way down. And that would actually be politically advantageous to the Biden administration, who is getting clobbered in the polls because of inflation. So there's actually a political incentive for the Biden administration to crack down on these LNG facilities and to hang Europe out to dry, wish them good luck, while he sees all the benefits of lower inflation readings. And we saw in this last CPI read how lower energy prices can really bring down the CPI. Biden could really use some lower CPI prints heading into those midterms. So, long story short, this is not a new rule. This rule has been on the books since 2004. There's been a stay of enforcement against it. That stay has now been removed. And all of these companies, these 250 turbines around the country, they have until September 5th to demonstrate compliance, or the EPA will take some unknown action against them, or they won't, depending on whether or not they feel like it, apparently. So nobody really knows what natural gas markets are going to look like in the next couple of weeks. Now, I have no open positions in the natural gas market whatsoever because, in my opinion, I think the entire natural gas space is uninvestable as long as variables this big are out there and they're basically just up to the mood swings of environmental regulators. Free markets aren't supposed to operate like that. Markets need clarity, and the administration is not providing that. There's really no way of telling what's going to happen in the next couple of weeks. But considering the implications of this, I'm surprised this story isn't getting more coverage in the media. As always, we will stay on top of this one and bring you updates as they come in. And until next time, live small and dream big.